Okay, so let's get right into it. Have you noticed this huge disconnect lately? The world seems to be on edge, but the stock market? It's acting like everything is just fine. Today, we're going to try and make sense of that massive contradiction.
I mean, you just glance at the headlines, and it's enough to make anyone nervous. You've got war, a critical shipping lane is basically blockaded, and we've got a big inflation report just around the corner that could change everything. The whole vibe just feels tense, you know?
But then you look at the stock market, and it feels like it's on a totally different planet. The S&P 500 just ripped off a 7-day winning streak, jumping an incredible 7.6%. That's its best run since last October, and it puts us just a stone's throw away from a new all-time high. It's kind of wild.
So that brings us to the big question, right? What gives? How is this even possible? Is the market just blindly optimistic, or is there some hidden logic here that we're all missing? Let's try and break down what Wall Street is really looking at. To get our heads around this, we're going to peek inside an analyst's playbook. There are folks who believe the worst is already behind us, and they're looking at a very specific set of signals that tells them the market is ready to run.
Okay, first things first, you got to know about this thing called the VIX. The easiest way to think about it is as the market's pulse, or its fear gauge. When the VIX is high, it means Wall Street is scared. When it's low, everyone's feeling pretty calm. And this little index, it's absolutely central to this whole story.
Now, one analyst, Tom Lee over at Fundstrat, who's known for being pretty bullish, he has this 3-part checklist. He says when you see these 3 things happen, it's a huge sign that the market has already hit its low point and is getting ready to climb higher. Let's take a look.
All right, so here's the thinking. First, stocks started to rally even when the news was still awful. We're talking before any ceasefire was announced. That's a classic sign. Second, the worst situation went from actively bad to just less bad. Now, for you and me, tense talks are still stressful, but for the market, that de-escalation is treated like great news. And third, remember that fear gauge, the VIX? Well, it completely collapsed. It went from a panic level over 30 all the way back down below 20. That's the market basically saying, okay, the panic is over.
And this isn't just some gut feeling. There's actually history to back it up. When you look at the times since 1990 that this exact pattern has played out, fear spikes, then collapses like this, the market has historically done pretty well. 6 months later, the median gain has been over 9%. So there's a blueprint for this.
But it's not all just about feelings and market psychology. Nope, there's a massive, fundamental engine roaring under the hood of this rally. And it's all about one thing, artificial intelligence. We're talking trillions of dollars being put to work.
And this isn't some abstract, far-off idea. Look at this deal right here. A cloud company called CoreWeave just inked a $21 billion deal to power Meta's AI ambitions all the way out to 2032. That's the kind of long-term concrete investment that gives the market real confidence.
And that's just a drop in the bucket. Amazon is projected to pour 200 times billion dollars into AI this year alone. I mean, to put that number in perspective, that single-year spend is larger than the entire economy of quite a few countries. These aren't just bets. This is a fundamental rewiring of the economy.
And you can really hear the conviction behind that spending when you listen to Amazon's CEO, Andy Jassy. He tackled the biggest questions head-on. Is AI a bubble? Is it overhyped? Are the profits real? And his answer was basically no, no, and a very strong yes. That's a powerful statement coming from the guy signing those massive checks.
And this optimism isn't only about AI. You've also got these massive corporate events on the horizon that get investors excited, like the potential SpaceX IPO, a company valued at $1.25 trillion. When a company that big goes public, it creates its own weather system, pulling market sentiment up with it.
Okay, so that's the sunny, optimistic side of the story. But you know we have to talk about the flip side. It's time for a major reality check, because the risks that could totally derail this party are very, very real.
For starters, that ceasefire is hanging on by a thread. The Strait of Hormuz, that vital oil artery, is still operating at a tiny fraction of its normal capacity. The conflict in Lebanon is still going, and of course that big inflation report this Friday could easily throw a huge wrench in the works.
And all this brings up a question that probably drives you crazy. You hear on the news that oil futures are falling, but then you go to the gas station and prices are still through the roof. What is going on there?
Well, it basically boils down to the difference between paper oil and real oil. See, traders on Wall Street are betting on what the price of oil will be in the future.
But refineries have to buy actual, physical barrels of oil right now. And the price for those immediate shipments has stayed way, way higher. The refineries have to pay that premium, and then they pass that cost straight on to us at the pump.
If you want a perfect snapshot of this whole economic puzzle, just look at the airlines. On the one hand, the bad news is brutal. Their jet fuel costs have doubled, and profit forecasts are down 25%. But on the other hand, look at how they're reacting. They're raising fares, adding fees, cutting flights that lose money, and because of that, most of them are actually expected to stay profitable. It shows this resilience that investors are betting on.
So where does all this leave us? Well, the market has clearly priced in a lot of good news, but the story is far from over. So here's what you really need to be watching to see if this optimism can actually last.
Keep your eyes on three main things. First, whatever comes out of those US-Iran talks this weekend. Second, that huge inflation report on Friday. And third, earnings season is kicking off, and we're all waiting to hear if those big tech companies' massive AI bets are starting to pay off.
And really, that's the bottom line here. Wall Street has priced in a perfect landing, the absolute best-case scenario. The final trillion-dollar question is simple. Will the facts on the ground actually justify all this optimism?